What is up, guys? Welcome back to another video. Today, we're going to go over how to trade the London session Judas swing. So I have some people that they can't trade New York session, and they like to trade London session. So today we're going to look at Euro USD and talk a little bit about the Judas swing that ICT teaches. Now, for London session, your sweet spot is going to be from 2 a.m. to 4 a.m. New York time. Okay. So we have our settings here for our time set to New York UTC -4 for New York time. You can set your settings down here. So, all right. So here we're going to start off on the 15-minute. But you also want to look at your daily chart and your weekly chart. And look at your weekly candle and ask yourself, is it likely to expand up or down? And look for some sort of inefficiency for it to draw to. So your imbalances, volume imbalances, relative equal highs or lows and you can look on the daily chart. You want to look and confer with the previous day's range. Okay, this works in both Forex, index futures, commodities. So a good place to start once you do your top-down analysis and figure out your bias, if you're bearish or bullish, is come down to the 15-minute, or you can use the 5-minute and look for equal highs or equal lows from the previous day's range. Okay, so here we have the 15-minute. Okay, this is from Friday, May 5th. So on the 15-minute, we have our sweet spot 2 a.m. to 4 a.m. Okay, so right here, price is at 2 a.m. Now, if we look, where do we have equal highs or equal lows? So we have equal highs right here on the 15-minute. Okay, if you notice this swing high, if you run it all the way back, it is relatively equal to this bearish candle's wick here. Okay, so this is where liquidity is resting just above these equal or relatively equal highs. Okay, you can even make an argument for a case that these two bearish candles have relative equal highs here too. And then this is our midnight opening price on this candle here, on this bearish candle here. So below us, we don't have any relatively equal lows until you come close to here. I mean, or these. You can argue these two, but we do have what? We have gaps. So we have inefficiency here. There's a fair value gap. We have a fair value gap here. These relatively equal lows. Okay. And then we have Thursday's low of the day. So this would be your external liquidity, since this is more than likely looks like yesterday or the previous day's low. Okay, you notice it says Thursday, May 4th, and Wednesday, so we know that that's the previous day's swing low. Okay, so we drop down to the 5-minute. Look for the same thing, relative equal highs. This matches here. These line up perfectly. And you also have these relative equal highs here that you can use, but we're going to use the higher time frame confirmed with the 5-minute. Okay, so now we want to see London session from 2 a.m. to 4 a.m. take out liquidity, right? So we have the form of buy side liquidity here, meaning there's buy stops here, right? People that are going to take the traditional retail of a breakout buys. If we break traditional quote unquote resistance here, they're going to take an impulse buy, maybe break and retest, and take longs here. Okay. Now, the opposite is true. We have retail support here, right? 5-minute support break here. So we have sellers coming in. Okay, right? So not only would you take out sellers here, you'd also take out buyers here. So this is going to be your Judas swing. Okay, this is what ICT calls the Judas swing. So why is price going to go up here? Because we have liquidity in the form of equal highs. Okay, this is suspicious. When you see very equal highs, this is where liquidity is. So if we play price forward, we drop down to the 1 minute. Okay, this is where we're going to be looking for our entry between this window here. Okay, this is our trading window for London. This is our London kill zone. So play price forward. Price continues to drop, but we are patient to see it take out liquidity. So you see here we have a sweep there. Let's see if we get another take of liquidity. Takes liquidity one more time. And then what happens here is we start to aggressively drop after we swept it one time here, probably took a small liquidity, dropped down, made a swing low. Okay, so if we're in market structure, we have low, high, lower, low, lower, high, or higher, high, lower, low, higher, high, lower, low, lower, high, higher, high, right? So market structure is up. So we put in this swing low, small swing low there, breaks it after taking liquidity there. So we play price forward. Price just continues to drop here, okay? This is your sign, right? Liquidity is taken. Now we get displacement or an aggressive move in the opposite direction is so energetic that we leave behind inefficiencies in the form of gaps, okay? So you notice from this candle's bottom to the third candle's wick, there is a gap there, right? We have what's known as a fair value gap. Okay, so this is an imbalance, right? We've also taken out this low, which is confirming a change of direction. Okay. Thirdly, if our biases were already in our head looking to take shorts or sells, we are above the midnight opening price, which is this purple line. So that helps give you confirmation that you would want to take shorts if you're above midnight opening price. Okay. So now we're just waiting for price to return back in here to give us some sort of rebalance, right? And give us a chance to enter our shorts. So we keep dropping down, drop down. Okay. Now at this point, you're probably thinking, I probably missed the move, right? But we didn't. Let's see and measure from this swing to this swing here. So if we go to the higher time frame, we can go to the 2 minute. You can also go to the 5 minute, right? 4 minute, 3 minute. So right here, the 3 minute, we want to take anything above 50% of this run here. Because on the 1 minute, you see we started to get a small pullback. So this is when we can measure from our swing high to swing low. And we want something that's in a premium. We have this premium. On the 2 minute, we also have this premium, okay, which lines up with just above 50% in our premium, and it also lines up with this swing low here being the market structure shift or the break of structure here. So the candle that broke structure officially on the 2 minute is this candle. So this would be your more precise entry. Wait for price to come up here. We could put our stops just above this candle for 5, or if you want to be safe, you can put it up here, right? And then what are we going to target? Well, we have some targets below in the form of these gaps on the 15 minute. So we want to just go for our lowest hanging fruit. So this would be our first target here for a 1 to 2. Okay, that's all you need. 1 to 1, 1 to 2, consistently built up. So if we play price forward here, price continues to drop. and we're tagged in here perfectly, just above 50% of this leg run down, right? Now we have to keep in mind price could possibly come up to the second fair value gap, but our stops are safe enough here that we know it's either gonna if our trade is valid, it should respect this, should respect the midnight opening price, should respect liquidity, and we know that the next draw on liquidity is beneath us to reprice these fair value gaps. Okay, so we play price forward. We get another aggressive move down. And boom. Hit take profit just outside our kill zone, right? Now, the official kill zone is until 5 a.m. But to get more, if you want a more precise window for the kill zone, you're going to be wanting to look to enter between 2 and 4 a.m. New York time for London. Okay. So these are the signatures that you want to look for. A false breakout, liquidity from the 15-minute or 5-minute. Wait for your structure shift, fair value gaps, then measure your price leg that broke structure and enter anywhere above 50% or just above 50%, usually the candle that breaks the structure or the swing low or swing high. Okay. So thank you guys for watching another video. Do have a private Discord if it's something you're interested in. We are having a special right now. It is a monthly subscription, but on the May 20th of this month, the price will be increasing. So you want to get in now. We do live trading, one-on-ones, coaching, mentorship, psychology, discipline, and some other strategies to really, really dial in your trading, learn some more principles, get in a group with like-minded people. We're all going to just feed off of each other, learn. You're going to find some consistency in the marketplace. Come join us. It's an amazing community we're building so far. And just click the link below. If you have any questions, feel free to reach out to me on Instagram. And don't forget to hit that like button if you got value from this. Comment below. And until next time, trade safe.